Hello everyone, welcome to our YouTube channel. And in this is basically a part 2 video of my earlier video on an evergreen trading strategy. If you have not watched that video, please do watch that. It's regarding pair trading, but that's exactly the title of the video too. So before I begin, let me also inform you why I actually decided to make another part of the same series. Couple of things, I did get a couple of dislikes on those videos. I'm not sure why, um, but I would definitely encourage you guys to please provide feedback as to what you were looking for, or things which you think are working or not working. Yes, I do understand that I did make a couple of videos, but the one which I uploaded it didn't have didn't have the stocks for selection and show you examples, and that is the reason I'm making a part 2 of this video. So please do provide feedback if you think something was missing, so that would be helpful for me too. All right, so let's begin today's session. So I spoke about an evergreen strategy which is known as pair trading, and pair trading is nothing but when two stocks behave or trade in almost the same direction, then you take a trade based on that logic or parameter. It could be from the same sector, or it could be from a different sector. So here today is 4th of July 2019, and from this link here I do these were the stocks which were selected. And please do understand that this could differ every day. It doesn't mean that these pairs work the same way, and there is a separate logic altogether. So let's take an example and go for it. So Bharat Forge and Tata Com. Let me go to my Zerodha terminal. Tata Communications and Bharat Forge. These are the two stocks which were actually selected, and as you can see, one was negative. So if I would have taken the trade at 9:30, the price is updated, but especially from the closing, this has basically this has closed in negative, and this has closed in positive. So at 9:30, what the logic actually applies is you are actually taking a trade based on a trend which is following the trend. So as you can see here, we take a buy trade at for Bharat Forge 468, which would end up in loss, and this and Tata Communications. So this has basically reduced, and then this 459 has actually increased. So you take a buy trade and a sell trade here, and as you can see, this pair would be in loss because we have actually didn't go in the same direction. It went into opposite directions. The second one would be MCX and Oro Pharma, and so no, I think this is yesterday's trade. I'm sorry. Let me go through it. Oh yeah, I think this is exactly the trade. Yeah. So Bank India. So Bank India and Castrol Industries. Bank of India and Castrol Industries. So Bank of India and Castrol Industries, if you would have taken a trade buy position here, it would definitely give you 1 points benefits. And Castrol India, if you would have taken a sell position, you can actually would have exited cost to cost. Let's see the prices of it at 9:30 a.m. So at 9:30, Bank of India was trading at 95 rupees 60 paisa, and at present 94.50. So at closing it was 1 rupee less. So it would have given you a 1 rupee 1 point loss. But here at 9:30 this was trading 132.30. It would give you a 30 paisa profit here, and just a small slippages. Based on slippages, we should we can see there is a trend. So you would actually not lose. This would might be a slightly negative loss, but or no cost to cost. There could be slippages because these are the prices at 3:30 or 4 p.m. I'm sorry, closing prices. So the intraday orders actually get squared off at 3:20 or before, based on your broker. At Zerodha, it closes at 3:20. So Oro Pharma, so there is another pair would be Oro Pharma and MCX. So you take a buy position at 9:30 on Oro Pharma, and it closed at 605. You take a sell position of on MCX at 861. It closed at 864. So that one would be 5 points profit, 4.5 points, and another would be 3.3 points. So there would be a profit of approximately 1.84 plus, and this again there could be slippages. Again, you would see here again there is a buy and a sell position. The best way to check here would be because the closing prices will not reflect you. So the Bank of India actually closed at 94.50, Castrol India. But if you look at the chart of Bank India, and if I click on it here, we will have to see the charts for the day and see how the day actually went. So one day chart here, and as you can see here, at 9:30 this was basically at around 94, and then it actually went above. And Castrol India, if you click on one day chart here, one day chart here, okay, sorry, yes, here we go. So Castrol India, 9:30, if you look at the chart here, it actually it goes down. It's a 5-minute chart, and it actually goes down here. It goes up from here. There could be a place where you could actually book profits in both the positions, and that's also possible with this strategy. If you are looking at a position where both your pairs are in profit, you can actually exit these positions in profits and then close your trades for the day. Now this is basically again, as I told you, this is just a follow-up video of my earlier video. So historically, pairs trading is considered to be one of the safest trading methods, and you should actually trade in most of the pairs, especially here, this Bank India Castrol, and then Oro Pharma MCX, Indian Bank Chola Finance, and then UPL and SRT Finance. So for example here, UPL and SRT Finance, you would actually be in profit in both the sides. As you can see here, you take the trade at 6:59, and this is already around 40 points profit, approximately 39, and here also you are actually on 16 points profit here. So which is a different percentage is provided, and you would be actually in profit in both sides. And same goes with Bank India here. Bank India, one side would be in profit, and the Bank India and and Finance, this is basically, there is another combination too. So basically this is part of an algo trading where you set up certain parameters and test it, and that's how this probably would be the future of trading itself, because the trading industry, people are actually coming up with strategies so that they do not spend more time or enough time in front of the trading terminal. And because when you spend more and more time in front of your trading terminal, you tend to overlook things, overlook a lot of strategies, a lot of technical analysis and a lot of things, and sometimes due to some emotional decisions can be wrong too. based on, since you are in front of the terminals, and you can also there's also a very good possibility that you can overlook good things, overlook a big mistake or a big blunder, overlook something big which is going on. So that's the reason we actually say that please do every 20 minutes you need to actually take a break from it, and then come back to see if you would have missed anything. And this break should be completely away from the system doing something else completely for the next few minutes. So that's the way you actually come back strongly with more energy. So this system actually does work. If you, some of you don't believe it, just try to um, test it for at least a month. Paper trade it for a month. Go to this page, do a paper trade at 9:30. Put down in a piece of paper about all these trades. Of course, you already have the prices here, and within few minutes, if you see profits, or within the next 30 minutes, if you see a profit, write down those prices. And this data will also be updated. So end of the day prices also you can update it, and then see which how it works and things like that. So in this way you can actually do it better. So that's pretty much about it on this video. If you still need some clarifications, feel free to comment on the comment section of this video. I'll be happy to clarify them for you. Thank you, and I will see you again on my next video.